Let's go back, and you should be seeing my screen. If you do not, please let me know. Okay, so if we go back to the cost benefit, the rational paradigm for choosing between different needs, and unfortunately that means that you have to, for the next years, in any reconstruction effort, targeting is very important, and prioritization. So obviously not all the needs are going to be addressed immediately, but the targeting and prioritization is important. And also, I think, from a public perspective, and from even a firm perspective, from attracting firms, to have a clear announcement, a clear policy of telling people what are the priorities, what are the immediate targets, and how they're going to be prioritized in time. It's going to be very, very, very important. This might include, in some of these interventions, you might include a lot of what people are thinking these days in terms of like interventions that are relatively cheap. They might include things that are not necessarily just the power plant or the sewage treatment or the water treatment. They might include things like a small community gardens where people can plant their own things in the downtowns, a small little interventions that are relatively cheap or even can be free if you work with different municipalities. If you have these friendships with different municipalities from all over Europe and the world, there might be some contributions here and there on small things that increase the quality of life and are not very highly costly. We call those tactical urbanism, and they've become relatively popular because the fact that we have less funding for infrastructure, it's a global problem. So some of these interventions might not be that expensive. I think that's where you have to bring in some creativity, also involve the public in some of these, or NGOs, sort of like, and you have that already going on organically, obviously. But while you might not have time for all of those, you can certainly foster those smaller interventions with high cost benefit that are very creative, that you try things and error, but you don't have the capacity to do them. So maybe you can have the local community do them. How do you do that? You set up small grants available for these urbanism initiatives that come from NGOs. Rather than having to spend 1 million euros on a specific treatment plan, why don't you have a 5,000 euro grant problem where you have 5 grants of 1,000 euros for these small initiatives that are less top-down, so they're really bottom-up from people doing their own interventions. We've seen that already, obviously, in your country, and that's your lesson to everyone in the world on how people have become involved in these reconstruction efforts. So it's a matter of perhaps even institutionalizing that process and have clear budget processes where maybe you can seed a lot of these small interventions that can add, because you don't have the time to do a lot of these smaller interventions. You're going to have to prioritize. Now, it's also important, I think, from a perspective of anyone who's doing a large capital plan like you guys have to do in the next years, is not only to have a clear priority, but also a time path for people to understand what are the priorities. So maybe you're going to have to start, okay, we're going to prioritize the downtown area where all the businesses are. And then we're going to go next to neighborhood 1, 2, and 3. And then in 4 years, then we're going to expand the infrastructure to neighborhoods 5, 6, 7, 8. That's unfortunate because every neighborhoods 1, 7, 8, and 9 also want the infrastructure, but it's not going to be possible. At the very least, by providing a path before you do the prioritizations, you allow the private sector to actually sort of react to this. So if you have, for instance, a potential firm that might be interested in coming to your town, if they know that you're going to put a lot of infrastructure in neighborhoods 1 and 2, that's where they're going to go, and that's fine, because that's exactly why you put the infrastructure there. If you don't communicate clearly to the private sector what's your plan, your path, not only the priorities, but the timing of the priorities, it's going to be very difficult for them to know what's going to be there. No? And then you're going to have political problems if a firm goes and puts their factory neighborhood can, which doesn't have electricity and water now, that you have a problem, a political problem, because now you need to put electricity to that neighborhood and not to neighborhoods 5, 6, and 7, because you didn't announce that. So if you announce to the factory, hey, neighborhoods 1 and 2 and 3 are going to be the priority for the next 2 years, and then neighborhoods 5 and 6 on the year 5, 6, and 7, then they can make decisions that are much more in line with what your priorities are, which may be locate the factory or the new shop or the new restaurant in neighborhood 1 first. Okay, so by announcing a clear path for investments, because you won't have the money to do all at the same time, at least you can make the decision making much more rational and improve the profitability of those private sector investments that are going to be looking at what you do in order to know whether they can move in back or they cannot. And the second, once you have a path, so it's not only a prioritization, but also a time listing of those priorities, then you sometimes going to have to be flexible around this, because we don't know, and that's very common in very large redevelopment projects. So say King's Cross in downtown London, huge redevelopment, about 30 buildings, different housing, different industrial. This was an industrial area that was dilapidated. And the redevelopment is so large, even for British standards, that it's going to go through 1 or 2 economic cycles. No, you can think, okay, we're going to do these commercial buildings, but in 3 years the economy is not doing so well, so maybe we just don't do them all now. So we still follow the path, follow the order, but we're a bit flexible with the economic conditions so that you don't force too much investment into a market where the investment is not really having a lot of success attracting firms. You can put a lot of infrastructure, you can put a lot of electricity, you can put a lot of water, but you don't have firms because the economy is not doing well. Why is it worth it? Maybe you can at that point redirect the resources into something else, and then as the economy improves, have that flexibility. So that combination of a plan and flexibility, and I think for you, it's very important, again, that you do this transparently and announce this so that everyone knows what's coming. That's important also in terms of this kind of like major redevelopment. We have, again, the experiences from New Orleans and from Houston in the United States and other sort of catastrophic areas. Some of the solutions, once you think about the path, you're going to start prioritizing some investments. Maybe because you know that some investments you won't be able to do, maybe then you also, when you consider the path, that path might have transitory structures, no? And that's what we do in the United States. Even in the United States, one of the most high-income countries in the world, we didn't rebuild New Orleans in even 3 years, much longer than that. So a lot of what happened initially is that we have these modular homes, these sort of infrastructures that are short-term or medium-term. So the advantage of this modularity is that you can start improving neighborhood 1 and neighborhoods 2 and 3, maybe get this modular or infrastructure that's short-term, and then once neighborhood 2 and 3 get redone, then neighborhood 4 gets the modular, so you can move, this can be transported to other places progressively. And also, these structures, because they tend to be made on local materials or local wood, they create an industrial base for your own country. So these are typically built in the United States. They're not built in Korea or in Taiwan. So this kind of infrastructure that's mobile homes, it's an infrastructure that actually does generate economic activity in your own country, and not it's not imported. Another example is in my other home country of Spain, where we had a lot of educational needs because of huge growth of the population due to immigration, and one of the solutions is to have these transitory structures that serve as schools. Some of them are very well designed, so it's a matter also of design and making them attractive. But if you look at some of these, they're pretty beautiful, they're pretty functional inside. And obviously now people are not happy with them, but obviously at that point where they were built, they were critical for serving to these needs. And they now can be dismantled and being used for something different. So this structure now can be a warehouse or just serve for like a community meetings or something like that, as we now have more and more money to build the schools slowly. So that thinking about these temporary structures is part of a necessary plan, and not only reconstruction, but certainly in any time that you have a very sudden change in the economic situations that might require this kind of quick needs for investment that you cannot possibly serve. Okay, so now let me go to your to answer a question that you asked, which is, what are the financial tools that you can use? So let's look at all the financial tools. And obviously, you know, which ones are going to be available or not to you, it's unclear. But I can certainly walk you through all the strategies that local governments around the world use, with a special eye for large redevelopment projects, urban redevelopment projects. So let's look at some of this. The first thing that I want to talk about is sometimes you can, if you do have some public assets, you know, and that's not going to be the case everywhere, but in the cases where you do have some public assets, sale leaseback might be one way to obtain money for redevelopment. How is that going to work? Well, say that the municipality, you know, that's a true example of Barcelona. In 2007, we had a huge crisis, a huge financial crisis, and a huge real estate crisis. So in 2007, 8, 9, the municipality of Barcelona didn't have the money to sustain. There was another problem, which was the capital markets in the European Union had dried up, and the Spanish government and the Italian government were having a hard time getting credit from the capital markets. So think about Barcelona, which had a much lower credit rating than that the national government of Spain. If the national government of Spain wasn't able to go to the credit markets and get credit, how would Barcelona get credit? Well, they couldn't, but they came up with this idea, which is you have a lot of buildings still, and again, that's going to be depending on which cities you're looking at. Not everywhere this is feasible, obviously. But if you are a city where you still have like these local public buildings, what they did is they sell these buildings and to an investor, and then they lease them back. Okay, so the municipality, the city, sells the building, and then it rents the building from the investor. There's usually in these sale-leaseback transfers, there's the contract specifies that the seller keeps the operation of the building, and it's going to buy the building back in, say, 20 or 30 years. So the municipality of Barcelona sells the building where they operate. Well, they have hundreds of buildings. They sell a number of buildings to really it's a lender, it's a financial institution, in exchange for paying the rent every month to that lender. So then after 20 years, the municipality of Barcelona is going to buy back, or 30 years, buy back that building from the lender. Think of this. This is similar. The only thing that happened here is that the lender lent money to Barcelona. Barcelona paid back via a rent contract because they were renting the property, and then Barcelona gets back the property at the end. This is exactly the same that a loan, no, in terms of the financial cash flows. The cash flows can be structured in a way that they are identical to a loan, no? The only difference, though, is that now the lender has a bit more security because they know that the city, if they get some money from, say, the central government or whatever, they're going to have to pay the rent first because otherwise they wouldn't be able to operate. So in a way, what the lender here is gained is a promise to pay from the local government that it's binding, that they know that the local government is going to have to pay the rent. Otherwise, the lender is going to get the property and the municipality is going to lose the building. So you're providing this collateral and a more security to the builder. And that's how Barcelona got into the lending market. That's one of the ways. Obviously, there's others, but that's one of the ways they sold, quote unquote, these buildings. This is a financial structure, and then the lenders, because now they're not going to lend you if you went to the bond market, you're going to get a CCC rating from the bond agency, and you're going to have to pay an interest rate of 30%. That's unsustainable. But if you, quote unquote, sell this building, then the lender is going to maybe provide you an interest rate of 7%. Why so low? Well, because they know they have the building as collateral, and if you don't pay, they're going to get the building. So they're pretty sure that you're going to pay. So whereas a generic bond from Barcelona, it's not worth so much in 2008, the building itself, it's probably worth much more because you expect the city of Barcelona to be there for the next 100 years. So that you're providing the lender an advantage over other lenders. So that might be one of the instruments that you can use with. In a way, it's a way to ensure the future revenues that are going to come perhaps from the central government that are going to fund the municipality. You give the lender the security that they're going to get a priority on those funds because you need the space to operate. A very similar kind of financial operation is build, operate, and transfer. So right now you don't have the money to pay for a new road. So what we're going to do is to have a firm, say a German firm, build the road and then operate the road, charging some kind of annual payment. This can be a toll that people pay, but obviously the people don't have the money, or more preferably what we call a shadow toll, which is coming from the local government, from the regional government, okay? So again, this is very similar to the sale-leaseback, but rather than selling an asset that you have the firm, a private firm, build the asset for you. You can work with the World Bank, with the IMF, with the BIS and these kind of transactions, and then pay the builder a rental price for this. Obviously, that's going to be cheaper because they own the asset. It's going to be cheaper than just going to the bond markets. Okay, so because they do own the asset, they have a bit of security that they can keep the asset, and they know that by doing this, they have a priority on government funds. As the municipality, say Barcelona, is receiving funds from the central government, they promise to pay first this rental price, this toll price for the infrastructure, okay, this shadow toll. This toll is not necessarily again paid by the people, it's paid by the government. But in a way, if you do believe that reconstruction is going to happen, if the central government really going to ensure that reconstruction, the money is going to go into reconstruction, in a way you're getting the money from the future that you're going to, the Ukrainian government is not going to be able to send you all the money immediately, but maybe 10, 20 years, you're going to get all that money for reconstruction. So that's a way to bring that money to today by having that firm do the investment on a build, operate, transfer kind of scheme. We do this in the United States via the ESCO, energy efficiency companies. This model is a very attractive model. And here what you have is, rather than selling an asset, if you have a company that can reduce the costs. So a lot of firms, for instance, industrial firms in the United States, spend too much energy. They're very energy inefficient. So what they do, their factories would need a lot of $1 million of investments to actually condition the factory so that it uses less energy. No, a lot of this is just making weatherization, so making sure that you don't lose as much energy in terms of heating and air conditioning. So, but they don't have the money to do that. So what they do is they contract with an ESCO, energy savings company. The private company does the renovation, invests all the money, so the factory doesn't have to do anything. I have a factory, I don't have money. I need to reduce my energy consumption, but it needs $5 million to do that. Because I don't have money, I'm going to contract with this company. This company is going to invest the $5 million, but then they're going to recoup or be paid back from the difference between the energy costs that I used to pay, that are much higher, and the energy costs that I pay now that are much lower, okay, because of these efficiency gains. So I have the private sector invest, and then they recoup their own money from the improvement in the efficiency that they did on that building. No, if I used to pay $500,000 on energy every month, now I just pay $200,000. So that difference, $300,000, part of it can go to pay for the investment that company did on the low energy technology. Okay, that's $300,000. So that's kind of the idea, and again, it can be structured via a build, own, operate. Notice that here, the factory doesn't need to make any investment. So what you're doing is you're selling the future savings or income that's coming from that investment to the private sector. Okay, bond financing. Obviously, again, that's another way in which municipalities go to the markets to obtain financing for construction that you need to do now. And the problem is that this is going to be very difficult in the initial years post-war. To go to the bond markets, you have very liquid bond markets in Europe, and they're probably going to be happy to invest in Ukraine. Now, they're not probably going to do that for the first 3, 4, 5 years until you have guarantees. So, nice way to complement this public borrowing from the localities is to have a guarantee from the national government, or even better, from the IMF or an international institution. What does this mean? Well, there's 20 municipalities that need money, no, in Ukraine. 100, let's call it 100. All of them have to go to the bond market, and you know what? 90 of them, it's pretty. We believe Ukraine is going to do amazingly well in the next 20, 30 years. So in the future, most of them are going to be able to repay, but some of them won't. The only issue is I don't know which one is not going to be able to repay. Out of these 100 municipalities going to the bond market, the European bond market, which ones do I trust? Which ones don't I trust? I don't know. I don't know which 5 are going to fail, or which 10 are going to fail. So why don't I have the IMF provide a guarantee that tells me if a municipality fails, or the national government of Ukraine provide a guarantee, or the European Union, whatever, provide a guarantee that, okay, if you lose money, if you think that 5% of these municipalities are not going to pay, and maybe you're going to lose 50% out of the initial capital, so you're going to lose 2.5% of the value of the mortgage, I'm going to insure you for, say, 1.5% of losses. So that really, really, really reduces the losses. If, say, only 5% of municipalities are going to default, and of them I'm going to lose 50% because you default a bit later, that's a 2.5% loss. And the World Bank ensures that 1.5% of that 2.5% is not lost. That's already a 60% insurance on that loss, no? So you see, with a little guarantee, a 1.5% guarantee, I can insure a lot of the losses, 60% of the losses. And you know what? Because the insurance is going to go to wherever municipality is failing, then I don't need to know, because I cannot possibly know whether this municipality is going to do well, or this is going to do not so well, or this is going to, So by providing these guarantees, these credit guarantees, with relatively a small amount of money, or not even money, it's just a promise. So this obviously it's a future promise from the central government, from the World Bank. They don't need even any money today to provide these guarantees. It's a way to make sure that you can get much more access to the public markets, to the bond markets. Even people, Ukrainians, are going to be happy to invest in bonds from the municipalities, but obviously they want a security. They're going to invest their pensions, their savings there. And so by providing some level of guarantees, you can, it's a reinsurance kind of like program, and you can reinsure the risks, and by reducing the risk, you reduce the cost of capital. You're going to get relatively cheap capital. There's private firms in the U.S. that do that. So there are firms, it's like an insurance company, no? Think about how insurance works. If I have a car accident, they're going to help me repay for the fixing the car. And what they do is they look at 100 cars and only 2 are going to have accidents. So 98 of us pay money to pay for the reimbursement for the 2 cars that have an accident. It's a little bit of the same. They're just going to cross-collateralize what we call cross-collateralized risk. That's a really good strategy to make sure that rather than my municipality, I go together with another 30 municipalities and we all go together to the financial markets and we provide a little bit of insurance to each other so that we reduce the risk for the lenders, and the lenders can then charge us lower interest rates. They're safer. Because you know what? I'm not just lending to you. I don't know how you're going to do. I'm sorry. But I'm lending to 40 of you, and you help each other if anything happens to any of you. So by cross-collateralizing these risks. Now, one of the problems with these guarantees is that some governments give too many of them. I think you can make the argument that Chinese central government gave a lot of guarantees to the local governments, and now a lot of these local governments are having problems repaying their debts, and the central government might not have enough money. They probably will, because they still have a lot of capital reserves from their imports. But obviously, you got to be very transparent as to where these guarantees are coming from to make sure that, if things don't go as well as you thought 20 years later, those guarantees are actually going to be fulfilled by either the central government of the IMF or other governments. But again, in terms of capital, this is a relatively cheap way for governments. It's politically easier for a government, say for the government of France, to provide you with a credit guarantee than it is to give you money. And at the end of the day, it's as valuable to you. A promise to help you if there's any default is really very valuable. There's a question there. Or it's, I think I did something that. Oh, I think it's automatic. I moved my hands and I got the hand there. So I apologize for that. Any questions? Okay, guarantees. That's something that you want to try to, maybe if you don't get money from the German government, you can get a guarantee from the German government on your bonds. And that can really enhance your financial capabilities. 1 second, I just lost my screen. So let's go to the next tool. And that's tax credits on the bonds. So each of your municipalities, or maybe not a municipality, sometimes you have like a water authority. If you have to do a dam or something like that, you have a generic authority. It's going to provide some, we're going to go to the market and issue bonds, but those bonds are tax exempt. So the money that your investors, your savers, Ukrainian people who save money and they buy your bonds, they're going to get an interest rate, and that interest rate is tax exempt. Obtaining tax exemptions from the central government is something that makes a lot of sense, and lobbying for that makes a lot of sense, or even a subsidy. But you certainly, if you get no tax payments on your local bonds, you're going to have an advantage in terms of going to the citizens and because they're not going to pay any interest on any tax on the profits from those bonds, on the interest rates. That actually makes more sense. So I think we have the model of green bonds right now in the market that really combines all these elements that I discussed. And I think this is a good model for reconstruction projects. So green bonds are issued with the explicit aim of addressing environmental issues. In your case, you could have explicit bond that's geared towards rebuilding energy facility or a water facility. So that's the specific issue. And you combine all these three things that we discuss. Some of them, they have tax advantages, so you don't pay taxes in Ukraine. And maybe you agree with other countries that the investors don't need to pay taxes in their own countries for the interest. You provide guarantees, maybe from the World Bank or the IMF, on non-payment, because they have 20 or 30 of these projects. The risks are, they're insuring the risks for everyone. You go through a special vetting process, meaning that these have to be really, really worth socially impactful projects. And because of these three things, because they have a tax advantage, they have guarantees for repayment, and because they have a special purpose, then you may obtain socially responsible investors who are willing to accept actually lower interest rates. So green bonds are based on the idea of these three, the combination between the guarantees, the tax advantages, and the social impact, mean that your investors are going to be happy. Rather than ask you for an 8% interest, they might ask you only for a 5% interest or a 4% interest. Okay, so that's the basics of the green bond market. Catastrophe bonds. These are now also becoming more popular, and these are bonds that are reinsured by a large reinsurance company. So again, these are bonds that are come together with an insurance from someone else. No, so say I'm a big shipping company. I ship products from China to the United States, and I'm very afraid that there's going to be a big catastrophe, and 5 of my ships are not going to make it. Because I need to buy those ships, and it's very risky. I would have very high interest rate on the bonds. If I just issue bonds to buy these 5 ships, it would be very expensive, because people in the bond market are going to go, well, you have these 5 ships now, but if they're destroyed, what happens? I wouldn't give you the money. But if I already renegotiated with a reinsurance company, Swiss Re, although we can talk about that market, it's really complicated right now because they're having problems pricing this. But if a reinsurance company can insure any catastrophic losses on those 5 ships, then I can go to the bond market and say, okay, you know what? If I do well with the ships, you get your money. If they're destroyed, then Swiss Re is going to pay for it, and then I'm going to give you back your money. So then the bond markets actually become active again, and I'm going to get the money here from the bond markets, again, from that reinsurance. And why does Swiss Re do that? Because, well, it's not just about the 5 ships of this company. They're insuring all of the shipping company, and they're looking at the whole probability that a number of ships are going to be damaged, no? And they can reinsure the risks. This is really difficult these days because these risks are growing in today's world. So reinsurance companies are not as active as they used to in these kind of markets. But again, rather than asking for money from the IMF or the World Bank, you can actually ask from some kind of reinsurance sort of facility. And they might be happier to do that because it's not money immediately they have to put on the table. It's money that only if bad things happen, they have to come up with it. Okay? And they're thinking about the probabilities. But by providing that reinsurance, you're really getting access to the bond market much more easily than if you do not. The accelerated tax depreciation. That's because I argued that a lot of your Western cities are going to need to really refocus on trade with the rest of the world. For factories, sometimes you can offer them things that are not money. No, what can you offer? Well, again, you don't necessarily have the money, but what you can offer them, working with the central government, what you can offer them is accelerated tax depreciation. So say, and that's what the Indian government does with wind turbines. Okay, the Indian government wants to bring electricity generation using wind turbines to India, and they don't have the money. So what do? Well, they ask private firms to do it, and rather than giving them money, which they don't have to subsidize, they provide them with accelerated depreciation, which means that for the electricity they sell, the electricity these companies sell after they put the turbines, it's taxable, no? The profits from that sale of energy, it's taxable, no? If I put a wind turbine and then I generate electricity, I sell the electricity, that income, as any country, has income taxation, and it's going to be taxable. Now, the advantage is that the Indian government provides an accelerated depreciation for only 5 years, which means that every year, you, as the operator, you're going to be able to deduct from your taxable income 1/5 of the value of the investment. And you're going to treat that as depreciation. Depreciation, you treat that as you're losing that money. You invested, say, $1 million in a wind turbine. Every year you're going to be able to claim that the life of the turbine is depreciated by 20%. So you're going to claim that you lost every year $200,000. So even if you sell energy for another $200,000 because you have this tax loss for $200,000, you don't have to pay any taxes. You have $200,000 of revenues, but because of this accelerated depreciation, you have $200,000 of costs that are taxable costs, and that means that you don't pay any taxes. Is the true depreciation 5 years? No. Probably these turbines are going to be there for 12, 13 years. So what the Indian government effectively did is to give this company the option of accelerating that depreciation, which means that they're going to have to pay no taxes or even negative taxes. As a matter of fact, in some countries, say that on the first year, you just sell $100,000 in electricity from the wind turbine, but you have $200,000 in loss, so you lost $100,000. So you have $100,000 in loss. In some countries, they even allow you to sell those losses to other firms, that they can apply those losses to their income to reduce their taxation. So in some countries, they combine this accelerated depreciation with the ability for the firms to sell their tax losses. No, if you have $100,000 in revenue, you're going to have to pay taxes for, say, $40,000. No, if a country taxes 40% of income, so if $100,000 revenue means that I have to pay $400,000 in taxes. If someone sells me a loss for $100,000, that's going to wash all the income, that $100,000, and I have to pay zero taxes. So what am I saving? $40,000, which means that there's going to be a market and people are going to buy these tax credits for up to $40,000. A little bit less because there's a bit of a discount, but I pay $30,000 for 100,000% loss, and I save $40,000 on my taxes. So that generates even a market where you have the firms creating value in a way and making this even more attractive. You have to put any money down for this kind of policy. Obviously, you do need some kind of interest from some kind of private actor. User fees, obviously, this is a bit of what they call privatization. Obviously, some of this reconstruction is going to have eventually being done by the private sector, and the private sector is going to be based on actually the collection of future charges. So if you have a water project, well, you're going to have eventually to charge water for water. Not necessarily the first year, not necessarily the second year, not necessarily the third year. Maybe there's a process that you have. The third year, the water charge is going to be 10 euros per year. On the third year, it's going to be 20 euros. On the fourth year, it's going to be higher. So you have a clear path for that future revenue to be associated with the investment, so that the investors slowly are going to be able to recoup their investments via the fees that they generate. Again, here the uncertainty, it's going to kill the private investors, because they want certainty that they're going to have enough customers in the future. So here, having guarantees from the government, it's another way to pass that cost to the future. In 10 years, you don't have enough customers, then you're going to need the central government to pay for so if you promise to have 10,000 customers, but in 10 years you only have 5,000, then at that point, the government has to come up with the difference. But hopefully in 10 years, things are much better than they are right now. So you can provide that guarantee also. And that guarantee might be a way for you to get credit right now for that need. Impact, so this is probably more of user fees are more of a strategy, not for you in the 0 to 5 years or the 0 to 3 years. It's probably what's going to happen years 5, 6, 7, as you start doing the basic reconstruction needs, and then you go into projects that might actually start to look better for the private sector, but that's definitely going to take a while. And without guarantees, public guarantees, it's going to be very difficult at all. Impact fees is another way. Let me show you how many countries do a lot of their financing for housing infrastructure. They do it via impact fees. I'm not sure this is necessarily the model that you're going to have to use, but there's something in the model that I think is useful to you. So what the many countries do is they're going to charge an amount of money to developers for each housing unit that they build. So if you build 30 apartments, you pay 10,000 euros for each apartment, 5,000 euros, 1,000 euros, whatever it is. And those, if you build 100 apartments, 10,000 euros each apartment, or 1,000 euros each apartment, you get 100,000 euros. And those 100,000 euros are going to be used to do sort of the sewage, the water, the connections with the water, the connections with the electricity to the main system. Okay? That's what we call an impact fee. You can also do an impact subsidy, which is you give you money for each unit that you build. Not going to go into that. Now, why? Obviously, for you, I know that your customers don't have the money. Your developers, if you charge them more money to build, they're not going to build. So that's not feasible for you to charge the developers, at least for the first 3 to 5 years, to charge lots of money to the developers to build. So that's not clearly the strategy I would follow if I were you. But something in that strategy that can be done by you, which is in some municipalities, like here in the municipality of Austin, Texas, what they do is they charge different fees to different areas. Some areas, so if you start looking at the area of the city is, say, the circle, it's much cheaper to bring infrastructure to the area that's really close to the area that's already developed. Okay? So you have a core area. Remember about the prioritization. If you have a core area where you put a lot of the initial infrastructure investments, then it's going to be cheaper for you to provide infrastructure to areas that are close by. How do they make sure that they do that without forcing people to do things? Well, they charge different prices. If I build a unit in the city, in the area that they want me to, in an area that's very cheap, in what they call the desired development zone, Okay, they're going to charge me only $700 for each unit as a developer that I built, okay, for water. So that's what Austin is going to charge you for each unit that I build in Austin. If I build in the desired area, they charge me only $700 and $400 for the sewage, for the water, the brown water that goes back. But if I build outside of the city, where it's very expensive for the city to provide infrastructure, they charge me much more. Okay? So that's a very smart way to do it, because what you tend to, obviously, you cannot predict everything. There might be a need for a factory to be far there. That's fine. You don't want to forbid or not allow them to develop far away. But it's much cheaper for them to develop close to where you have already the infrastructure. So you can do this price strategy or this subsidy where you have, if you build into the priority area, you create a priority area where you're going to put the first infrastructures. And then for any development that happens within this priority area, maybe I don't even charge you anything for development, or maybe I even give you subsidy. But you build 5 kilometers away. Unfortunately, it's very expensive for me to bring water to this area and electricity, so then I'm going to charge you a price of 5,000 euros per each unit that you build there. So use a very, rather than necessarily using the taxes, use this idea of creating several areas and having several either taxes or subsidies, and link that to the cost of the infrastructure. That is, I think, what we learned from these case studies of the use of impact fees. I'm going to stop now, and now I have the translation. I'm going to take any questions that you have so far. And I have a question here. Does a municipality credit rating affect its ability to raise funds independently? Yes, dramatically. As a matter of fact, I'm sorry if this comes to negative, but some of you are going to have real trouble getting into the market. That's why this insurance or that guarantees from the central government might be a great way, because some cities might be in better shape than others, no? Some Ukrainian cities in the West might be doing fine. And their solidarity, they may be happy to provide you with a guarantee that in case in 10 years in the future, if you cannot repay, they're going to repay, because in 10 years they're going to be in much better shape themselves. So you can get that guarantee from the Western cities to repay your debts by pooling that debt. So you need some kind of a solidarity mechanism here, because if you go by yourself to the bond markets, it's going to have very difficult. So that's a very good question. Other questions, please. Okay, I'm going to go because I have a lot of materials. And certainly, I'm going to be happy to come another time if there's questions that I didn't answer, just for a brainstorming session where I can answer your questions. I'm totally happy to do that, Olevsky. You have my contact. Exactions are similar to impact fees, but I don't think it's a model for you. You have it there. Let's look at the Chinese model. And I think you're not going to be able to do this initially, but maybe you're going to be able to do this in 3, 4, 5, 6 years. The Chinese model is based on land that they own. So I'm not sure about the structure of land ownership, but certainly many of your cities are going to be forced to acquire some land that no one's using or it's abandoned. So strategically, you can bank this land for the future. And hopefully, if everything is going the right direction, and again, not right now, probably we're talking more like after the war ends, 3 to 7 years, then you can use that land and sell that land as the Chinese government does. They finance a lot of their municipal infrastructure needs by selling land. Okay? A way to do this, a very transparent way to do this, is via a public land lease. So what you do there is you provide land to a factory. You're trying to get this factory, say you're working with this Turkish company or Spanish company that produces that produces textiles. You tell them, why do you go to China? Come to Ukraine. It's much better geopolitically. We're your friends. So get that factory going to Ukraine, and you provide them the land for free. Now, this is your land, and you can combine with even subsidies, but this is a land lease, which means that, say, after you can land lease it for a period of 50 years or 99 years, but after a certain period, the land comes back to the to the public sector, which means that you're not making like a few people rich. This has to be incredibly transparent. You have to have a very clear set of policies that people can qualify, especially factories can qualify to get a land lease from you. But it's not that you want to make people rich. No, in 20 years, the municipality is going to get back the land. And maybe you can even negotiate in a land lease contract, you can even negotiate that if the revenues from the operations of the factory, because they have to pay taxes for their revenues at least at some point. If the revenues go above a point, then you're going to start charging even a little bit of a price of a lease for using the land. So that makes sure that you're subsidizing the factory to start with, but if they make so much money in the next 10 years, you're not making people rich either, okay? Because you're tempted now, because you really need the money right now, you're tempted to give things for free. But unfortunately, in 20 years, I'm confident you're going to be in a good position. And then, because you might have given so much for free, you make people rich that why do they deserve that, to have that subsidy from you? So in a land lease, you can contract future payments that depend on whether the factory does well. If the factory is very successful, then they're going to have to pay money for that land lease, that leasing, renting the land from you. But if they're not doing so well, they have an implicit subsidy, which is they get the land for free. Okay? So land lease is a very effective way, a very transparent way to actually provide the land for free, especially for large manufacturing projects. Value capture, that's similar, and again, that's not something that you're going to be able to do now, but certainly maybe 5 or 7 years in the future. Rather than selling lands, what sort of Brazil does, and that's done in Sao Paulo, they sell development rights. So, not all cities you can build everything that you want. You need a development permit. So there, what they do is they sell the development permit. You can build maybe 4 floors, but you need a permit to build the same building at 10 floors or 12 floors. So what the Sao Paulo does is sell the ability to build at higher densities, and they get the money to invest in infrastructures. Again, because unfortunately, I think that for many of the cities that where you guys dealing with, the valuations are not going to be so high. That probably doesn't make sense for you right now, but it might make in the future. Obviously, there are other more classical ways, and I'm going to go pretty fast through this because the property tax, the local sales tax, the income tax, those are other ways to finance infrastructure. The problem, obviously, you have this demand and supply issue that we already talked about, because you need to increase demand at the same time. You probably don't want to establish a lot of these tax instruments to start with. But again, remember, it's really about providing a path for people to understand what's going to happen. Maybe you can really clarify that in 5 years we're going to start taxing sales, and in 10 years we're going to start taxing properties, and so on and so forth, to make sure that even if you get money on credit for the next 3-4 years, you also have create your own sources for success for the futures as the economies come back. Okay, now let's go to private sources. No, so these are like bond markets and like guarantees. They're mostly private. So let's look at the public. So let's look at private sources. One of the ways is the business improvement district. Okay, here you have a number of, you have an industrial area, so you have an industrial zone, and you don't have the money to do the reinvestment in that industrial zone. Okay, they need roads again, they need water, they need everything, and they need to redo the factories. So why a business improvement district is you create a special area with these firms, rather than paying taxes to the city, they pay taxes to pay for their own improvements, or at least for 5 or 6 years. So you create what it's called a business improvement district. Alexei, go ahead.
Альберт, можливо запитання додати? May I ask?
We have a question.
Please.
But loud.
Підкажіть, будь ласка, ця програма
Would you please tell us this
у цих районах, вона
this
державна?
program BID is it state program or it's the local program?
They have to be regulated by state law or regional law. Now, in a federal system like the United States, this happens at the state level, at Massachusetts or Florida. In some other countries that don't have such decentralization, has to happen at the central level, like Beijing. So you typically need a law to that, because you need a very clear set of incentives about who's paying what and what are the savings. So sometimes the government might incentivize this. So say, I'm going to show you something that's similar, and it's even better in a second. But yeah, basically you need a state law, but it's done by the local government. So you have a law at the national or the state level, but some cities have it, some cities don't have it. Okay? And again, the incentives, how the incentives are structured, that's the national law. One thing that's important to have a national law is because, say that you have 10 factories in an area, okay? And, well, they need to reconstruct. And you tell them, okay, fine, use your own money to reconstruct, but in exchange for that, you don't have to pay taxes to the central government, okay? So they save money from paying taxes to central government, but then they have to reconstruct their own roads, their own water. That's fine. The problem with that sometimes is that, say, 6 factories say, yes, I want to do this, but another 3 don't, then the problem is that there's a free riding, no? The 6 investors that did it, then they're improving the roads, they're improving the water, and then the other 3 or 4 can take advantage of that. You need a law that if you have enough number of investors and they still claim their properties, you can actually either force the other investors to also make the investments or expropriate those investors. So if I have 10 factories, 7 want to contribute, 3 don't, then I need a law that allows me as a municipality to expropriate the 3 and give those 3 factories to the other 7, and then tell those 7, okay, now you rebuilt all this area, you're not going to pay taxes to me, but you need the law for the implementation of this, because then otherwise you'd have, no one would invest because you don't know what the other people are going to invest, and there's a problem there. So you need a coordination, and that coordination can only be done with a law. And again, I don't know your legal system, if you have the regions or the central government, but the legal system is important here to make sure that you either have everyone involved contributing or expropriation. Did I answer your question? Okay.
Looks like that.
Awesome. So that's BID, and they have to define an area. I'm going to talk about tax improvement districts, which are very similar to this. This is mostly done voluntarily by the business organizations. So this usually comes from the business organizations, 5 factory owners. They go back and they look at the factories and they go, we can rebuild. Let us do it. We put the roads, we put the water, but don't tax us because, So that usually comes from the factories themselves. I'm going to show you another instrument that comes from the local governments mostly. Another way to go about this is with public-private partnerships. Okay, so here again, you're providing some benefit to an investor that's gonna improve in the future. So typically, this has some kind of cross-subsidy. You give the investor something valuable in a place to put money in a place where things are not so valuable. Let me give you an example of this. It's the Bright Line train in Florida. This train unites the cities of Miami and Orlando, Florida. It also stops at Palm Beach, West Palm Beach, and there's another stop I quite don't remember right now. It's a fast train, and the Florida government invested exactly $0 on this train. How could they do that? Well, they went together with the private sector. What did they do? They provided this company with the land around the stations in both Miami. This land was owned by public rail companies. They provided the land next to Miami and Orlando, and that land is so valuable that then, not necessarily not right now, but in the next 10, 20 years, that land is going to be very valuable for developing on this land. So with these future profits on development, because they have very valuable land, the private company can raise money from the capital market or shares, and people buy the shares of Bright Line because they know they own this land in Miami and Orlando that slowly they're going to develop, and they're going to make a lot of money from the developing on that land. But in exchange for that right, they have to build the railway. Okay? So here the idea is you provide something valuable to a company in exchange for doing something in places that don't have so much market value. Now, unfortunately, this does require a bit of, cross-subsidy. So maybe you promise something in the West, like land in the West, to do improvements in the East, something like that. So there's a cross-subsidy aspect to this, okay? And so it does need the central government to actually sort of, again, exchange private investment in an area where the market value is not as high in exchange for business development rights in areas where actually there's a lot of market value for those investments, okay? So there's a bit of cross-transferring that you need to do in this kind of idea. Go ahead, please.
Так, я задам українською мовою.
I'm going to
Підкажіть,
ask
будь ласка,
you, could you please tell us, what do you think,
що повинна зробити держава, щоб
what
бізнес
has our state to do so that business would be relocated to the destroyed lands if they could operate on the competitive territory which haven't been destroyed and they don't want to. So what does the state have to do? What the privileges or benefits it has to provide, or maybe even do not have to provide? What would you recommend?
Yeah, you're all in competition. No, that's the truth. Everyone is affected. I totally understand your plight there. So you need a commitment from the central government to really, again, sort of that redistribution. The best way to do it in a political feasible way in your country is via these guarantees. Rather than this example I gave you, probably politically it's very hard because now you can give land rights to develop in Lvov and sell those and subsidize the East, but politically it's going to be very difficult. Guarantees, credit guarantees are much easier because you gave the guarantee to everyone. But obviously the risk is higher in one place than the other. So but you're implicitly already, if you give a guarantee that I'm going to guarantee the debt of all governments, you're already giving much more of a guarantee to the governments that are in higher risk than the governments that are in less risk. So that you need, and that's a lobbying issue, you need to lobby the government to do this kind of redistribution. and I'm being very honest here, in ways that are going to be more acceptable for the public throughout the country. And you know what more acceptable? That we're all treated the same, no? So that's kind of like credit guarantees, or kind of like insurance redistribution. So an insurance also, say I live next to the water and someone lives in the mountain. If there's the water elevate comes, I'm going to be more affected. But rather than saying, oh, we're going to give more money to the person who's in the water, why don't we say both people pay the same for insurance? Okay? And then if the water, whenever something happens, we're going to pay it to the people who needs. Okay, that's a much easier political argument and sell than just to say, give the money to the person who lives next to the water. You see? Because it's going to be the people on the mountains are going to tell you, well, why would I pay for the people in the water if I don't have water and I'm very far from the risk? So I think these have to be framed in a very egalitarian kind of framework. And I'm being very cynical here. You know, you're being very strategic in an equality terms. Like every single person pays for national reconstruction, and we all get the benefits if we need it. But obviously, there's a clear regional redistribution doing it that way, no? The same way that I pay the taxes, the taxes to pay for someone in Florida who's now have the house reconstructed because Florida has more hurricanes, no? You have to base this in terms of national solidarity and national love from each other. Otherwise, it's very difficult to do this redistribution that you need.
Дякую.
Thank you very much.
Thank you. So that redistribution is hard to do. I'm not going to go into this because it's about, and I can talk about public-private development. But if you do private-public development, especially again, I think you definitely those central government guarantees are going to help you more than they're going to help the other areas that don't need reconstruction. But if you actually do joint business, this kind of joint business with public sector, you really have to have a very strong financial team. So all over the world, people try to do this redevelopment especially of like industrial areas. I thought about Liverpool, or this is being really big problem in the U.S. Detroit. You know, if you go to Detroit, it's really dilapidated. They tend to do this. A lot of their strategy is based on these public-private firms because they don't have enough money. But if you do that, again, it may be too early for you the next 3 years. But as things improve, probably talking the year 3 to 10, probably going to be more effective. But then you really have to have a very good team that understands that thinks like a business. You have to think like a business to really go with the private sector on these business transactions. And I'm happy to talk to you later about this or on another meeting if that was necessary. Another strategy, it's based on, that's from the World Bank, on what they call sites and services. So, in many countries, they had a lot of like humane housing. There was housing that wasn't humane. So that's India, Nepal, so on and so forth. So what did they do? Well, the local governments don't have the money to build the housing that you need. Impossible. Okay, you just have so many people that you don't have the money. What they did do, though, is this sites and services program. This sites and services program was, the idea was, rather than provide housing, which we don't have the money, let's provide just the land and all the infrastructure, the water, the sewage, and the streets. And let's do this in a very compact way in places that are cheaper to do the infrastructure. So these are already central areas that are close to the areas that where you have already infrastructure left. Okay? So let's focus on these areas. Let's just put water. Let's put streets. Let's put and then slowly we give the sites and services for free, and slowly people rebuild. They started like this. And then they ended like this. The World Bank looked 10 years after, and they saw very low quality housing in these areas. But after 30, 40 years, they see that slowly people started rebuilding, and from like, very, sometimes you had even carton or like wood here, and these like stuff that's made of like salvage materials. People slowly put one floor and then another and then another. So you provide that minimum infrastructure, and then slowly you allow people to make slowly the investments that you need. Or you can do that also via industrial park, put the infrastructure, and then slowly have that industrial component come back to you and do their incentive, their own investments. Gonna go relatively quick because I'm aware I'm running out of time, but if you allow me, I'm gonna take until 15 past the hour. Is that acceptable? Oleski? Well, since there's no response, I'm going.
Зараз графік. Я би хотів, щоб люди всі розраховували на цей час, але давайте ми попробуємо ще.
Let's make a kind of exception today. Yeah, but people, yes, they want to leave, but let's make an exception today. Yeah.
Yes, I'll be done in 10 minutes. The next, again, the same idea of the BIT is the homeownership association, where you let the owners do their own infrastructure. That's called a home ownership association in the United States. The municipal government doesn't pay for anything here. All of this, all the roads, all the sewage, all the water, all the pool, everything is paid by the local developers. But again, you need a law that establishes very well what are the obligations of the developers, and then the homeowners association. The developers sell the property to homeowners association or the local government. So let me just very quickly talk about tax improvement financing, because I think it's very similar to the concept of a bid that I talk here. But here what you do is have an area that you decide that all the taxes in the future that are going to be generated by that area, that's especially true for industrial areas, all the money coming from these taxes is going to go back to the infrastructure of that area. That's called a tax improvement district. And the method is called tax improvement finance. So what does this mean? Well, so if I have 5 factories getting there, in the future, they're going to generate some income. The national government allows these future income taxes to be exchanged for the interest paid on the investments that the firms did today. So what you're doing is, in a way, you're selling the future taxes that are going to be generated in that area in order to get a bond to finance the infrastructure. In many cases, the firms themselves are going to do the infrastructure. So right now, you get 0 taxes from this area. But in the future, in 20 years, as the valuation of that area goes up and they create business, they create employment, they're going to get taxes. The money that's going to come from these taxes, it's going to be used to pay back the bonds that these firms generated to build the infrastructure on the initial year. Okay, so here you're capturing the future taxes from the next 20 years from the benefits of operating in that area, and allowing these future taxes to be now used by the firms to issue bonds. And it's the firms issuing the bonds, so they have more credibility in the bond market than you if it's a good firm. And they're going to get cheap financing because they know that how are they going to repay for this? Well, they're going to repay with their own taxes they would pay the government. Rather than paying the government, they're going to pay the bond holders. So this is a very efficient tax exemption. You're taking these taxes away from the firm, and they can use them now to pay for their own infrastructure. So that makes a lot of sense, because that's gonna, if a firm pays taxes to you, they'd rather pay taxes to go to their own area than to another area of the city. Now, if they pay taxes to the municipality, but they know that those taxes are going to be all going to their own infrastructure, that's much more attractive for a firm. So that makes the attraction of the area much, much higher. So again, you insulate an area, you create an area, and all of the taxes in the future from that area are going to be captured by the government, but just to repay the bonds that were used for the infrastructure of the construction of that area. That's called tax increment financing, and I think it's a really, really good strategy for you. With that, I'll take some questions and I'll leave it there. I had a couple more issues, but they're not critical, and I'd rather take the last questions from you.
Питання почути.
Я хочу сказати, що тема
I would like to say that the topic is very, very deep and very complex, and you united the global expertise. You showed dozens of different approaches of the investment attraction and onto the reconstruction approaches. So yes, we are limited right now. The situation is complex in Ukraine, and especially we don't have this understanding of these approaches, because yes, you have some practices, right? We want to. We have again the problem with mining. It's not natural catastrophe, disaster, right? We understand even when the war is over, there will be other repercussions of it in terms of demining efforts, etc. We need like 40 years more to clean everything. So of course we have this limitation, unfortunately. And we have to really think about where we can get money from, how to move forward. And of course, when we think about the overall reconstruction, and we talked about it a lot of time, and even international community also talks about it, that in fact, potentially, we had around 30% of investments from different funds for interest-free, but they think that the 70% has to be commercial funds. So we think that we really need to think about some combination of social approach towards investment and also search for the business interests for the sake of investment. So I would like to say that right now, today we were overloaded really with information, but it's so interesting. So thank you so much. If you have any questions, colleagues, please. But generally, I would like to say, Mr. Albert, that the majority of those people, we have more than 60 people here, and they are sitting here, and we have 7 p.m. here in Ukraine. It's kind of late, but they are still here. They do not leave. And I just follow the dynamics, whether they leave or not. But I see that they are all here till the end. So thank you very much. Thank you for the participants for staying that long. And I also would like to thank your expertise, your and other SMEs like you who really support our Ukrainian people. I hope there will be this resilience building up. Unfortunately, I was a bit late because of this heavy snow in Ukraine, but I would like to say that yesterday also we heard a lot of important information, and I would like to accentuate that we really need to keep this thread, I mean, to connect the dots, connect the lectures. This is the course of lectures, which gives us a lot of sets of solutions, and I understand that we have this possibility to reach you out in case of need if somebody has some questions. So we feel the support of yours. Thank you.
Definitely. I'm a resource for anything that you need in the future. And I mean, you must know that you're beloved everywhere in the world, and we're all hoping that you do well. You will. So thank you.